Steps to growing your income from scratch. Hello everyone, and welcome to Finance Bliss. Wanna know the truth? It is, finding new ways to make money is simple if you're already rich, but it's more difficult if you have no other sources of income. Only 30% of the lowest income American families have savings accounts, according to a recent study. Millions of working Americans still struggle to pay their rent and buy food, and 54% report living paycheck to paycheck. According to reports, inflation is generally hitting the middle class. They would need to receive $500,000 to feel safe financially. Fortunately, there is a way anybody who wants to start building their money from scratch. It doesn't require the same obvious advice that appears in every article, such as investing 15% of your income in a 401k, living within your means, or skipping Coachella. Even though I concede, it's still fantastic advice, and probably a lot better than what most people are doing. Make sure to get your free stock in the description below because it's worth up to $1,000. However, these are my personal suggestions that I have learned directly in terms of properly and realistically creating your wealth from nothing, respectively of your education and history, because there are few simple step-by-step guidelines that anyone can use, which are already effective and don't cost you a dime. Aside from this video, of course, it greatly benefits my channel and also allows me to determine whether you would like to see more of this. In order for me to continue doing things like this in the future, please let me know by clicking the like button. Thank you so much, guys. Having said that, let's start. Be careful who you listen to is my first piece of advice before we get into these step-by-step details. There are many folks out there who are completely broke yet enjoy offering financial advice whenever they have the opportunity. These are the folks that tell you that credit cards are terrible, only the poor get loans, that you need a college education to succeed, and that you shouldn't open a business because it's too costly. Don't get me wrong, most of the time, the folks who tell you these things do so with sincere belief. However, the truth is that if you truly want to increase your wealth, you must go against the flow and do what the majority of people do not, which includes listening to those who are already where you want to be. You should probably follow the advice of those who have already accomplished what you aspire to accomplish. The second is that if we're being truthful, you will need to go out and earn some money if you want to start building your wealth from scratch. Someone had to say it, unless your job pays you a ridiculous sum of money or you're an expert poker player, if your objective is to acquire wealth as quickly as possible, you probably won't be doing that through typical employment. Instead, advise choosing a line of employment or a company that doesn't depend on how much time you put in. If you only pay attention to one point in this video and ignore everything else, make it this one because it's significant. Most of the time, if you work in an hourly job, you will reach a plateau relatively fast. There are only so many hours you can put in a day before you exhaust yourself, and once you do, you've reached your limit. Nevertheless, you should work any job that pays. Depending on the outcomes, your income could increase dramatically because hours are no longer a factor. Personally, I believe among the most underappreciated professions is sales. Usually, it's a first step towards earning more money. You learn what you need to know about time management and customer service, and it might be able to help you raise money for practically anything you choose to accomplish in the future. Did you know that employees who stay in their companies longer than 2 years receive pay that is on average 50% less? Now, if you don't want to work in sales and prefer something a little bit more steady and reliable but still want to earn more money, take this into consideration. In the interim, think about changing careers, leveraging your skills, and using that as a way to earn more money, especially at a time where so many businesses are struggling with a talent shortage and are prepared to pay anything to find the right candidate. However, in general, I'd say that the majority of people you hear about who amass incredible fortune relatively quickly from doing nothing did it by launching a business. They identified an untapped need in the market and developed a solution, or they observe an already successful business and discovered a way to improve it. Knowing how to do this is not difficult either, and almost all of the knowledge you need is currently available on YouTube for free. Long-term wealth growth will depend heavily on your ability to be self-sufficient enough to seek your own solutions. Now that we've cleared up some of the self-help rhetoric, let's look at some of the top step-by-step strategies that you can take to start building your wealth from scratch. The third tip is to develop the habit of investing everything right away. The average millennial between the ages of 25 and 34 spends more than $2,000 per year at coffee shops, and 41% of them admit that they spend more on Starbucks than they do on their own retirement. This has to stop immediately. That's because you'll have more money if you give your money more time to grow. How will you uphold and keep those behaviors is more important than how much funds you're investing at the moment. Keep in mind, for instance, that a dollar invested at age 20 with a 7% return will be worth $11 at age 65 once you truly start producing a lot of money. But if you delay and invest that exact same dollar at age 30, you'll only have $10.68 by the time you reach 65. Additionally, if you wait until you're 40 years old, all you will have is $5.48. In other words, your investment is presently worth twice as much as it will be in 10 years. When I first understood that idea at the age of 18, I totally transformed everything and rewired my brain so that I now view every expense as taking away from what it might be in the future. I decided to regularly invest everything even if I temporarily stopped making any discretionary purchases. Additionally, you ought to start a Roth IRA as soon as you can and make contributions to it. This is a retirement account that you may deposit money into. After the age of 59 and a half, all of the profit you make is fully tax-free. So, if you invested $1 when you're 20 years old, it will now be worth $2 when you're 65. By the time you cash out, you won't owe any taxes, giving you a lot of more money for Lamborghinis and yachts. For anyone looking to start building wealth from scratch, this is especially beneficial for two reasons. First, you're probably not making much money right now, so you're already in a really low tax bracket, which means you'll have much more money left over to invest. And second, the sooner you start, the longer your money will have a chance to grow, giving you more money over time. That's all there is to it. The practical response to how much you should be saving is as much as you're able to. Even while some financial gurus advise you to set aside 10% of your salary, that amount is just insufficient. Just think about it. It will take you around 51 years to accumulate enough money in your investments to replace your salary if you invest 10% of your income beginning at the age of 20. If you increase that to 30%, it will take you 28 years. But if you can save 50% of your salary, you might retire in as little as 17 years while your investments continue to generate enough income to support your standard of living permanently. Developing the habit of saving as much money as you can, as soon as you can, will enable you to increase your wealth as quickly as possible. Start now, even if you're not generating much money, since once you do start making more money, it will be much simpler to sustain. The fourth and last insider tip is to diversify your sources of income once you've completed the previous three. This one is so significant that the Internal Revenue Service actually made the research on high income tax returns public in order to examine the distribution of economic well-being. Or, to put it another way, they wanted to understand why some people made more money than others. They discovered that people tend to earn more money on average the more revenue streams they have. In light of the fact that 3 or more means of income account for 65% of millionaires, I advise you to leverage as much as you can. In the survey they used most frequently, the primary revenue source was from a job or earned income from a paycheck. In this stage, practically everyone begins, and their primary source of income is the same as if they were working a regular 9-to-5 job or getting paid a salary. For most people, this is the income generator that supports the other income sources, such as the second dividend source, and makes everything else feasible. This is most likely the second easiest form of income that practically anyone watching could start right away. It's as easy as going to any free stock trading brokerage, such as public down below in the description, and using the code GRAM to receive a free stock worth up to $1,000. After that, simply buy any dividend stock available and you're done. Dividends might range from 6% if you invest in Apple to 7.6% if you purchase it, depending on what you choose. However, you may also invest money in something like a broad index fund, like the FIFIX, which pays you 1.3% annually. Generally, the larger the yield, the more risk you assume. Capital gains is the third item that is connected to that. When you sell an investment for profit, what happens is what is known as your capital gain. And it is even great if you hold that investment for more than a year. Compared to the taxes you pay from actively working, it will be taxed at long-term capital gains rates. The long-term capital gains tax rate is 0% if your annual income is under $40,000. Interest income is a potential fourth source of income. This is what happens when you hold your funds in a higher-yielding savings account or essentially any type of bank account that pays interest at the end of the year. They will give you a 1099 interest form, which you must submit to the IRS as additional income. The fifth stream is rental revenue, which you might also diversify into if you start making enough money. In terms of purchasing homes, fixing them up, and then renting them out for profitability over a decade, this is personally my favorite option from the entire list. Real estate has so many tax benefits that make it highly unique and beneficial for anyone who wants to spend their time studying how to do this, or the majority of people who want to invest their money and build wealth. For instance, if the property's worth increases over time, you might realize long-term capital gains if you decide to sell it. If you make money renting out your house, it is rental income. You can then reinvest your earnings in the stock market to increase your wealth. I've also read numerous articles claiming that 90% of millionaires are real estate investors. And while I haven't been able to find any studies to support this, I wouldn't be astounded if quite a few rich folks kept some of their wealth in real estate as a way to protect against inflation or as a place to live. The revenue you earn from doing a second job or a side job is the sixth item on this list. I genuinely believe that individuals are missing out on one of the most undervalued earning opportunities. And that must change right off the bat. Working on a side project that has the opportunity to become entirely independent from your primary source of income is an excellent strategy to increase your income and diversify your sources of income in case something was to happen to your regular employment. I just want you to consider this and ask yourself, what do you do between the hours of 6 o'clock and 12 o'clock every single night? That translates to 6 hours every day, or almost a full workday every single day that the majority of people don't use in its entirety. This is the perfect opportunity to maximize the use of the resource that each of us has in equal amounts, namely, time to earn more money. Finally, what you'll need to achieve that objective and how long it would really take if you start from scratch, because $500,000 is the amount that would make most Americans feel financially comfortable. First, I'll make the assumption that you make at least $31,000 a year for the purposes of this computation, while I realize that some individuals viewing this will need to work their way up to that. If that's the case, it would be better for you to decide exactly what you want to do and create a plan to progress toward a steady income. The next stage is to cut every cost as much as possible. Like I stated, the average American spends $18,000 annually on non-essentials, and this is an area where almost everyone could start making savings right away. This is doing whatever you can at the moment to lower your housing expense first, such as moving in with your family if you have the option, living with roommates, or moving further away if you don't mind a longer trip. From there, be sure to prepare meals at home. Do not eat out. Drive a solid, reliable used car that gets good gas mileage, and only purchase items that you truly need. You'll have more money on hand if you do this. Third, if you live frugally and limit your discretionary expenditure while earning $31,000 per year, you should be able to save around $200 each month or $2,400 annually. If so, set up a Roth IRA and invest the entire amount in a wide market index fund that closely tracks the market, such as VT Sachs. You'll notice some steady savings, tax-free profits, long-term growth, a little dividend, and if you can save even more, hit the like button for the YouTube algorithm. Finding a side business or part-time job that you could undertake after regular business hours, perhaps as a restaurant waiter, is the fourth and, in my opinion, the most enjoyable step. Even assuming an extra $35 each night, 4 nights a week, starting a side business or doing anything for a few hours a night would net you an extra $560 per month that you could put into a Roth IRA. When you have enough money saved, we may go on to number 5, which would be changing employment. As I suggested previously, employees who change jobs every 2 to 3 years end up making a lot more money than those who remain with the same employer. And even changing professions once results in an average wage raise of 15%. If you can enhance a $31,000 a year career by 15%, you might save an additional $390 a month. When you add the side job, which even pays $35 per night 4 nights a week, that's $950 a month in income. That's all assuming you don't do anything else than that in step 6. But even if you did, you could achieve your $500,000 goal in 18 years at an 8% return. And after 30 years, you'll have $1.55 million, which is almost your whole retirement. In all likelihood, you won't end your journey there. By year 3 or 4, you should be able to leverage that $31,000 career into something that earns $46,500 a year. And if you could choose to further save that difference, that's an additional $10,000 a year that you could invest. There's nothing that says you can't change jobs every 2-3 years to end up making significantly more money. Assuming you're already saving, according to this example, you would have $1,775 per month to put toward increasing your wealth. If you did this, it would take you 13 years to accumulate more than $500,000. That also excludes any potential growth in your side business income, which would certainly reduce the time frame to less than 10 years only by enabling you to save an additional $580 each month. But what's known as lifestyle inflation is one of the hardest things to keep up with all of this. When you earn $40,000 a year, you can save some money and have no complaints, which is what happens. However, if you reach a yearly income of $60,000, you treat yourself by buying a slightly fancier car, apartment, or you begin dining out a little more frequently. This is a small change and nothing out of the ordinary. But when you start earning $90,000 annually, your existing residence suddenly isn't as wonderful as it once was. As a result, you upgrade to a higher level and purchase an even fancier car. However, after a year, when your income has increased to $150,000 and your apartment appears a little messy, you move into a bigger house. Additionally, when parked next to all the other BMWs and Mercedes, so you purchase a nicer vehicle. You might start traveling, but a funny thing that occurs to a lot of individuals is that they end up saving exactly the same amount of money, earning $150,000 per year, as they did when they were working $40,000 a year. Although now earning 4 times as much money, we refer to this as lifestyle inflation. In fact, a recent research revealed that 44% of millennials with incomes above $100,000 were living paycheck to paycheck. Without going through each of their spending in detail, I can confidently say that this was primarily due to a lifestyle inflation. The only way to get around this is to work so hard that you don't really have the leisure to spend your money if you get more money. You may do this by keeping your costs exactly the same and investing the extra money right away. But overall, by following this strategy, it is completely feasible to increase your wealth from nothing to $500,000 in 10 years, even without having an outrageously high income. I realize it's easier than it sounds to live within your means, cut costs, change jobs, invest the difference, and do everything else stated here, but it is totally doable if you're committed to raising your income. Over the next 10 years, giving up short-term expenses to invest more is definitely possible. You just have to step outside of your comfort zone and make it a priority. You can potentially set yourself up for the rest of your future with a decade's worth of sacrifice, and it all starts right here. Please click the like button if you enjoyed this video. With that being said, I want to thank you all for watching. As always, I sincerely appreciate it. Be sure to click the notification bell and subscribe. I appreciate you watching, and see you again real soon.